Hey everyone, John Henry here, and today in the market psychology video, we're going to be taking a look at crude oil. Lots of really good action today on crude oil. We started off the day, very obvious gap lower, right? Now on Friday, if we take a look back at Friday, we just kind of had a lot of back and forth, and really the day ended as a big old wedge, right? We had a huge drive down that met with a big drive up, but they couldn't really make a new high. Then the sellers tried taking back over and they couldn't really make a new low, and that leaves us with a wedge. We also did end the day with a nice little bear channel coming down, but then we open up today with a huge gap lower, and we gapped lower directly on top of major monthly support, right? Now the initial bias on that is probably going to be profit taking, right? Any sellers who were short into Friday going through the weekend, you open up on a huge area of support, a big gap down, they're going to take some profit off the table. So that's where you get that first little buy bounce right there, but it was met very kind of quickly with a nice bear move back down. So the bull move was very short-lived. And that shows that the sellers, well, they may not be done yet, right? The sellers held in, they took some profit off, but if they took everything off, you would have seen a big follow through. In this case, you got no follow through, right? And when the buyers tried breaking out through the highs again, it had this big old wick on the top showing that they were really just selling into those highs. Tried one more time to push up again, and then that was the obvious statement. Sellers are not done yet. They're looking for another push down. So it's a nice quick area for a scalp back to the downside, knowing that the sellers are likely looking for something else, right? Kind of prove what we're doing. But that also sets up an interesting scenario where we have now a range on the day, right? That range pretty apparent in this case. So likely they're going to be taking some profit underneath that range low. We push underneath the range low, it's immediately met with buying pressure. Now we have a range, we're at the lows of the range, we're potentially fake breaking out of the lows of the range. It is a beautiful place to go long and fade that downside move right back up into the range. Now, this is where things get a little bit interesting because this range, you're looking for a rotation, right? You're looking for the range to go back to the high, back to the low, and just kind of ping back and forth. But in this case, we had a huge bull strength move, no follow through. The bears try taking it and they're met with more buying pressure. So that tells us a couple things now. The sellers that were looking for further movement down have now liquidated out of their position. If they didn't, we would have had follow through. That also tells us that buyers are buying into this move even more aggressively than they were back here. So that tells us that we should expect a long side breakout. Now, how far is that breakout going to go? Don't know. Right? We'll just kind of play it by ear. Is it going to be a strong breakout? Is it going to be a weak breakout? You have to kind of play it by ear until you get that information, but that is definitely a long signal for buyers coming into the market, shoving any remaining sellers out. We follow it up, huge breakout move, right? That is a breakout that means strength, right? That is not the type of breakout that you would be looking to fade into. That is the type of breakout that says, holy crap, I need to get long, right? That's the type of candle that we have right here. Breaking firmly outside of the initial range on the day. Buyers are going to buy this thing like candy. And that's exactly what happened. We followed it up with an equal and larger move back up to the upside into that wedge top, now turned into resistance. So profit taking area, very obvious right there, and that's what a lot of people did. Take some money off the table in a known area of interest. Now, is this little bear candle right here and this bear candle right here, is that going to turn this strong of a market away? Probably not. Very infrequently are you going to see this kind of move turned around by a candle that looks like that. It's just not going to happen. It's like stepping in front of a freight train, right? There's just way too much weight flowing in one direction to just stop by putting your hands out, right? It's just not going to work. So the buyers followed up with another push higher, and then we begin going into a range going into lunchtime. So just beautiful morning action here on a breakout of a range, really, of the morning. We were in a range until about 10 o'clock. And then after 10 o'clock, man, we just blew out of that thing like nothing. So beautiful breakout movement. And that goes to show you the phenomenal use of market psychology in combination with technical analysis. Really good 1-2 punch. So that's going to do it for me. Hopefully you found it interesting and hopefully you learned something. And until next time, we'll see you later.